Hey, good afternoon. And right now, today, what comes to mind is about Social Security benefit. A lot of times, as a small business owners, we felt like Social Security is not really something we cared, right? It is too little, too far away. And however you feel about it, you might even think that it's going to be bankrupt anyway. So we don't care. But this webinar, we want to change your mind. We want you to care. Let's just go to see what we have in storage for you. And of course, all of our webinars, and we put this in and us to say that this is a free knowledge sharing and you take responsibility and we do our due diligence, we do our best. Of course, knowledge updates and the slides could be interpreted wrong. So make sure that you take your responsibility and we will be here, be available to you whenever you have questions. All right. So what is Social Security benefit? And this picture is a screenshot from Social Security Administration. So that really covers all of the benefit in general, okay? And of course, today we're not talking about Medicare, which is part of the Social Security benefit, but is totally separated. And so we don't talk about that right now, but today we're focusing on that retirement. We were saying that for Social Security taxes we pay and how that would play into the retirement. And of course, paying Social Security taxes is not just for retirement, right? So if you got disabled at work, and Social Security also pay you the amount that you got from the retirement. So they will pay you early, they will pay to your disability payment. And of course, if you are a survivor of another Social Security person who has a Social Security payment, then you're also entitled to payment, like your kids and you as a spouse. So there is other benefit related to it. But today our focus is on retirement. So how much can you get? This is always a question people would ask, okay, fine, Ying, I'm going to do Social Security. I'm going to pay taxes, but all these taxes I pay, just don't think it's going to benefit me at all. What is the maximum? What is minimum? So we knew that what we're paying, right, on Social Security taxes, you on your paycheck, on your salary wages statement, and whatever your gross salary or wages is, take 6.2%. That is what your employer take away from you, right? They take away from your paycheck. So even though you make $1,000, but you actually ended up with less than $1,000 net pay because they're paying for Social Security taxes. And of course, the employer also match to whatever you put in. So you really are not out just by yourself. So there's 6.2% from you, 6.2% from your employer as well. So overall, you got 12.4%. So you imagine for every $100 you make, $12.4 are actually saving it somewhere at the treasury and under that trust fund. And so it's saved there for you. It's no different for grandma is saving 12.4% of your little Christmas dollars and for your future, right? It's saved somewhere. And in 2022, the maximum monthly benefit for someone with Social Security benefit is $4,194. The minimum is $49.40. So that tells you, based on how many years you worked, based on how much money you made, and your benefit could fluctuate could be different from $4,000 all the way to less than $100. The national average, however, it is $1,657 a month. So normally, if you worked a normal life and with the years put in, and you would retire and your monthly check from our government, from Social Security Administration would be $1,657 average. The key to the calculation. So how is Social Security Administration calculate the benefit? That is a real mathematician's job. And I don't try to be expert to it. And I don't want you to be either. All we need to know is to know the general logic behind it. So there's two things that I want you to impress you upon. So there's only, let's say you worked for 50 years, 40 years. But only 35 years with the highest income would count towards your Social Security benefit. If you work less than 35 years, the missing years would have a zero factor to it. So basically, you work the maximum 35 years, then 36 years and 7 years would not matter anymore. But if you're 36 and 37 has a higher income, they pick the higher ones to come to calculation. And then the other things I want you to know is the 10 years is the minimum years you must work in order to qualify for the benefit. 10 years is 40 quarters. And the 10 years, if you say, well, I control my Social Security tax contribution, I just want to do 10 years maximum. Yes, 10 years. And then you for sure got it. If your 10-year salary is very high, and then you still get very good Social Security benefit payment. And you can start claiming as early as 62, but the full retirement age, it is now 67, not 65 anymore. It is 67. Your benefit will be paid in full. So between the 62 and 67, I know you can ask me, so what's the difference? The difference is about 30%. So if you claim the benefit on the 62 years old, your benefit is about 70% of the full benefit. And if while you are claiming the benefit at age 62 and your salary is 19,500 in that year, then you actually reduce your benefit. So it's not recommended for you to make money while claiming Social Security benefit. You want to wait until your full retirement age to do so, right? That part of the conversation, I would say that when you are arriving, when you celebrated your big 60th birthday, I want you to come to me, come to Community CPA, and we can talk about, we can plan when is the best time for you to claim the Social Security benefit. But this webinar though today is to address how small business owners, how we can start that right now. And then did you see that 35 years? Did you see if you are retiring at 62 and 35 years to begin, that's age 27. That's so early, right? Who is thinking about retirement when they are 27? So I don't want you to think about retirement when you are 27, but as you are a small business owner, I want you to do it on autopilot. And I want you to do this Social Security benefit without thinking, because it is rather important, okay? So now, small business owner's mindset, I'm a small business owner, I pay my own salary, and I don't want to pay too much taxes, so I don't want to pay myself too much. Isn't that your thought, right? I'm too busy to think about retirement. I don't retire. Isn't that sound like you, right? Sound like me, okay? I'm still young and I do not need to think about retirement. But Social Security calculation for the highest benefits started at age 27. So if you are age 27, still out there drinking in the bar and dating the world, and probably time to think of whether you have a salary, putting in your benefit so you can qualify yourself first, and then later on you can work on your maximum 10 years highest income, right? Social Security will go bankrupt when I'm reaching my retirement age, 62. Isn't that something you hear? So let's talk about this bankruptcy of Social Security. And my simple answer to you is that is not possible. It is not that even I'm being optimistic. It's just not possible for the government to bankrupt Social Security benefit. But of course, if United States no longer exists, of course, we don't have Social Security benefit. As long as the government is still there, as long as the president is still being elected, whether crazy or not crazy, and we will have Social Security benefit. And let me tell you why. And the rumor has it, right? Social Security will go bankrupt. And Social Security Administration recently released a report, because that report was the report they released and make people think that way, because it says that the trust funds are expected to be depleted by 2034. So a lot of people think that what? Oh, the money depleted. Of course, they're going to file bankruptcy and there's no way, this thing going to survive. But listen, when we depleted the trust funds, that just means that the benefit would be cut by up to 22%, which means if you're getting $100 benefit, now you're getting $78. So the benefit will be cut short, but it's not going to go away. And the only reason people talk about benefit will be cut short is because they're assuming that more people claim Social Security benefit than people who are paying payroll taxes. So of course, baby boomers are a big contributor to the need of Social Security benefit, right? So they're all running to retirement age. And so they're claiming Social Security benefit. And then younger generation, and they're not working. And you got the young people are eating off their parents' home and they don't work and they don't need to work. And playing game is much more attractive. Why do they work, right? So with that kind of social imbalance in terms of working and claiming benefit, we have this deficit, we have this difference. But you know what? COVID-19 had killed a lot of seniors. So a lot of people were on Social Security benefit, now cannot claim, they're dead, right? So Social Security benefit would always have this balance, would always have this way to figure out how much of what payroll taxes they get and how much they have in the trust funds. And ideally, we should not touch the trust funds. They should be growing money. They should be meeting the needs of this kind of situation. So right now, the trust fund is doing what it's supposed to do because we are not, people are resigning from their work. So there's no payroll taxes can be paid. And the Social Security is having less income to put in. So they start using trust funds. It served its purpose, didn't it? So it's something that very naturally happened, but it will not terminate the plan because we always gonna run payroll, right? Congress have to find a solution for the trust fund before 2034. That report is really a crying out loud to the Congress saying that you got to help me figure out how to invest the money so we can make more profit. And I mean, right now, the trust fund was invested very conservatively. I think I was told they only do the treasury bond. So it's like 2.5% of interest rate. So it's very little earnings in there. But if they could, liberate the trust fund operation, maybe there would be a better way. There would be a better way to make sure that the Social Security trust fund grows some revenue, right? Social Security has a steady income stream via payroll taxes. You run payroll for your small business. So part of the money you're paying on I-41, that is what we send to Social Security. And so as long as we're submitting that, people can take it, right? You are not retired yet, you don't take it, but maybe your mom and dad taking it, right? And the trustee can adjust benefit time markers and make everything work. What I mean by that is they could, how now the full retirement age becomes 67, it used to be 65. So they could say that, well, now we live longer. So full retirement age, if they meet a lot of people like me, I don't know, I would really even get close to retirement at age 67. So if they tell me that the full retirement age is 70, I'm not surprised because that's maybe just how I would operate my own life. So really, and they could change that time marker, then make everything work. And they could say people live longer, so we're going to do adjustment, calculation can change. Because this kind of report they come out, it is all actuarial scientists who are making models. So if the time markers change, the model changes. So I promise you, if we change those time markers, the report will come out and say, we got so much surplus in Social Security, we should be paying more money to the Social Security beneficiaries right now. So it is a thing that government put out there to secure the older ages income, right? Just having that there and established back in 1935, folks, is not going to go away. It's not going to bankrupt. It is almost you are saying that Federal Reserve is going to running out of money. How could they? They're going to print money. They don't run out of money, right? So same thing. Social Security not going to go bankrupt. They can change the way they give benefit, but it's always going to be there. So with that said, we say that, we still have the small business owners goes, Ying, I hear you, but I just don't want to pay Social Security. And is that easy to avoid paying Social Security tax? Let's just run through the possibilities. As a small business owner, to 100% avoid paying Social Security taxes, maybe do not run payroll for yourself at all, okay? And do not pay yourself 1099 contractor payment. Don't do that. Do not file Schedule C return, Schedule C, that form with a profit. And do not file Schedule E as a real estate professionals, and do not as a general partner. If you can just get away from doing all of these as a small business owner, I guess, yes, you don't have to pay Social Security tax. But how easy is that? Not easy. Not easy if you are successful, because you would have to spend money. And, we have tax audit happens in this way. Small business owners don't want to pay themselves money. And so, but they had luxury cars, they got the trip with the family. So the IRS agent come around, goes, your lifestyle suggested that you at least makes $500,000 a year on income. So $500,000 and imposed as your taxable income, then it is self-employment income. So you have to pay your 12.4% Social Security taxes. So that, if you're successful, is very hard to avoid paying Social Security tax. But I would say that's how the government works. They figured out how to make sure that everyone pays enough money to that Social Security benefit trust fund, to that place. So when we are older, even if everything fall apart in your life, you still have this one check coming from Social Security, and that goes steady. That is always there. Even if you are not living in United States anymore, that money can still be deposited in your bank account. You can live out on the island, out of the grid, but you still have the money, right? So plan Social Security taxes is a thing for small business. For successful small business owners, you will not be able to avoid paying Social Security taxes. You just can't. But you can plan for the maximum benefit, or simply plan it as your safety net. You don't have to make it to relying on that, but you can make that to be a default just in case everything else went wrong. Say, your business failed. You owe a lot of money. You went bankrupt. Creditors going after you. Can they go after your Social Security benefit? No, that's yours. So these are the pointers I want you to keep in mind. As a small business owner, what do you want to know about Social Security benefit? And you don't need to be actuarial scientist. You don't need to be a mathematician. You also don't need to be an expert in Social Security benefit. You just want to know that in general. So the amount of Social Security benefit payment is calculated based on your 35 highest earning years. Okay, I'll show you what that is. You can pull out your own statement, look at what are your years. And the minimum qualification is 40 credit, which equals to 10 working years to qualify for that. So small business owners, if you're running your payroll, don't you want to at least get your 10 years in so you can qualify? Once you have the 10 years in, you qualify, then you can work out your wages to get the highest wages you can, so your Social Security is play out as part of your security blanket when you are older. The Social Security tax cap rate for 2022 is $147,000. 2023 next year is $50,200. So those means that you cannot get more Social Security benefit calculation in a year, if you pay yourself more than 147,000 in year 2022. So say if you are running your own business and you want to pay yourself $200,000 on W-2, then for Social Security purposes, and you don't need to, you just pay yourself 147,000. That would give you the maximum already. And the 401 no deferrals, folks. If you run your own business, you might have a 401k, or 401k profit sharing plan for your business. Do you know that your personal deferrals, 20,500 when you are still young, but 27,000 if you are older than 50 years old? That money, it is not only save your income tax, and it also pays Social Security taxes for you. So means that it saves your income tax. You don't need to pay income tax, but it doesn't get away from paying Social Security taxes. So you can still, so for that 147,000 folks, you actually only paying income tax on $126,500. So your $20,500 doesn't need to pay income tax, but Social Security is still there. All right. Then your 400k match pays no Social Security tax. 400, what your 401k match, that one you have related to your 401k plan, the company match doesn't pay Social Security tax. Your pension paid no Social Security tax, only avoiding your income tax. And your K1 1120S pays no Social Security tax. And your 1065, as long as you are a limited partner, you pay no Social Security tax. Of course, your capital gain doesn't pay Social Security tax. So really, as owner in our life, the only thing Security tax on is our wages and is our income coming from Schedule C if you have a profit, or if it is your 401k deferral, that also pays Social Security tax. And also your 1065, when you are a general partner, when you are the one that working on taxable wages, then you are also paying 1065 K1 on Social Security tax. So these are areas for the small business owner to know your Social Security taxes is being paid. So now you want to manage that tax. As a successful business owner, I know that you know our community CPA's 5 wealth mix. You know, we say to people that after Social Security benefit, did you hear me saying that? After Social Security benefit, and you can invest your money into 5 categories. That's a good balance. It is not because I have a crystal ball, I know everything. It's because I look at my 10,000, 12,000 clients, and I look at those ones who are really successful. That's what they're doing. And they have money in the stock market. They have money in the retirement saving. They have precious metals and jewelries, and they have real estate. They have life insurance. And of course, these are 5 wealth mix that is on top of the Social Security maximization. So you want to have your Social Security in, then you build the rest. Why do I say that? And just look at these items right on the screen. And the stock, you could lose it. We have so many people, so many clients right now are scrambling with stock losses, right? Some people lose their 17 years saving. And I'll tell you that that is a real issue. We look at our folks, small business owners. Some people worked all 40 years, but lose their money on the stock market this year and to the bottom. And they lost years and years worth of wealth accumulation. And your retirement saving depends on where you put it. You know, remember Enron stories. So people who put retirement over there, they lost it all. Okay. And then precious metal jewelry can be stolen. And the real estate, can have something happen, the value drop, whatever you did. So those are also not that risk-free. Am I right? Life insurance depends on where you buy your life insurance. I always tell my folks that if you were going to buy life insurance for 100 years later, you better buy it from life insurance company who are 100 years older, because you can't just go on new ones and thinking that they're going to survive while you are living for 100 years. No, because I don't really, with my experience, I don't trust those privately owned. I don't care how many shareholders they have in there, but these are privately held companies. Even if they're public traded on the stock market, it just means that they become a public company. So they're using your money to make money. That's all. All right. So with that said, all of these 5 wealth mix are risky. They have risk bigger than Social Security benefit, bigger than the government risk. If someone can spread rumors about, Social Security gonna go bankrupt, and all of these, means you have, they all gonna have rumors about bankruptcy. So that is just how we understand where our money is. There's no better place than putting the money on the mattress. I know what you think about it when I say that, but seriously, and we have business owners are putting money under their mattress. I never agreed for it 10 years ago, 5 years ago, I doubted it. And now today, I felt like they were lucky, because if they put money on the stock market, it's already become a negative. So with that said, again, I am stressing one point. Social Security is a very good retirement tool. It is a safety net for regular citizens like you and me. So you want to plan your business to give yourself the maximum Social Security benefit first. And it does, when we say that you need to, you need to put money in the Social Security and maximize your Social Security benefit, I'm not saying that you have to pay yourself top salaries every year. Of course, if your business is so successful, you could do that. You definitely should do that. But even if you don't, you can consistently put in the money, and in your sending paycheck to yourself consistently on the same amount for 10 good years, you still have a very good Social Security benefit. And so one of the mathematicians' calculation of Social Security benefit, sometimes I ask them to do a rough calculation for me, because I'm so simple-minded. I don't understand the math, and I certainly not actuarial scientist. So the calculation is that if you can put a similar amount, if you can give yourself similar amount of salary for 10 years straight, and that would give you the best yield of Social Security benefit that you can get out of that formula. But that doesn't mean you're getting the 4,000, right? You may get the average of 1,160 some dollars national average, but you get the most efficient payout when you retire. So now, a couple of examples. So how is S corporation does it? Like say, if I'm a S corporation shareholder and also employee, how do I do my Social Security benefit planning, right? S corporation owners pay owner salary of 100,000 and satisfy the reasonable pay first, right, from the IRS. Because if you run an S corporation, you can't pay yourself little salaries and thinking I'm going to avoid taxes. But the thing is, there's a reasonable pay requirement. If you're a dentist, you're running an S corporation, you really need to pay yourself reasonable salaries in your area in order you to not be audited by IRS saying that you should pay more into your payroll taxes, and run that by 10 years, okay? And of course, self 401k deferral, that 20,500 at yearly maximum. So you want to do deferral at maximum, because that deferral, you don't pay income tax, great saving, right? But you do have your Social Security taking out of that. So it is actually a very good Social Security payment to your total income.
So even though you are paying 100,000 gross revenue, you pay the 100,000 Social Security, even though your taxable revenue, it is 100,000 minus 20,500, which is 79,500. All right. So all of the rest, is Social Security tax free as an S corporation shareholder, because your company match of 25,000 to your 401k is free of taxes, income tax, and your cash balance plan, you could develop cash balance plan is a pension plan for yourself. That 175,000 to pension is going to be income tax free, and the company distribution to you, whatever amount that is, it is not going to pay Social Security taxes. So it is going to only pay income tax. And the real estate rental income, if you have rental income because you rent your own properties in your company, and that is also tax free. That is also Social Security tax free. Of course, you pay income tax, right? Capital gain and other passive income, you don't pay Social Security tax. You only pay income tax to that. So this is how S corporation would do. What about partnership? Partnership would do. So in partnership, and you need to identify the members. Some members are working members. Some members are decorative members. I'm saying in that way because I'm trying to separate them. For example, if you have a partnership with your partner and you are building houses, but your partner gives you money. So because you're building houses, so you are the working member. So your income, your portion of income should pay self-employment tax, which means you should pay Social Security tax. But your partner, who is a passive member and he just give you money, he doesn't participate in the business. So his portion of income will not pay Social Security tax. So you, as a partnership, you want to clearly identify who is going to pay Social Security tax, right? Self-employment tax. And in another word, understand that not all the members need to pay self-employment tax on the income. Okay, consider to shift income to the spouse who does not have minimum credit with the Social Security yet. And, do not forget, if let's say if you own the company, you and your spouse are the members to the 1065, and then you got enough income and your spouse doesn't work, so then maybe your spouse need to be considered for the Social Security benefit. It is really important to make sure that each one of us has our Social Security benefit coming to us when we reaching that retirement age. Like I said, everything you have, the 5 wealth mix, none of them is secure. Every one of them can disappear at you, okay? But Social Security will not. Now, we have a lot of questions related to ITIN holders. So how ITIN holder does it? So ITIN holders are the one who doesn't have a Social Security number yet, but has an individual tax identification number. So sometimes you have already worked on ITIN numbers, had already run payroll, everything under that ITIN number. So when you got your new Social Security number, that requires you to transfer the credit, because otherwise your new Social Security number will treat you as new. They did not know you actually worked for 10 years already. So when your immigration status changes from ITIN to Social Security number, and you want to know that it is not an automatic transfer. It is not. Maybe in the future, when the system is more coordinated, Social Security Administration and immigration can tie the knot and start transferring data. But before that can happen, it is not automatic. Because it is not automatic, so you need to personally make that happen for yourself. To transfer Social Security credit, you need to bring your ID to prove that the ITIN number and your new Social Security number is for the same person. Then you want to visit your local Social Security Administration office and request transfer of credit. So that is really a step you need to take. And we want to make sure that you don't forget the credit that you generated under your IT number. And there's also people came to us and said that, successful small business owner, and the person was using other people's social security number and operating business and doing work. There are small number of them, and due to immigration status, we're using other people's social security number and paying social security tax. So there is no way to get that credit back, as using other identity to work or conducting business is illegal. So with that said, don't even bother. You don't have it. You have to start from zero. If you got your new social security number, the number you used, that credit belongs to that person, even if it is a dead person. Okay. Apply for ITIN today, though. If you are in that shoe and you are using other people's social security, not good idea, because you're wasting your time. How many, if you don't, and I don't. So you want to be able to accumulating that credit right now. So apply for ITIN today and do it right. Accumulate the credit under your ITIN so you can transfer at the later date. All right. So now let's just quickly summarize what we talked about today. Okay. Social security benefit is not going away. In fact, is the most reliable income you would have in your lifetime. Most reliable. As a business owner, make social security tax your priority, paying yourself good wages. Make that your priority. Okay, you can save money in so many ways, but pay yourself, get your social security benefit in, so you have your safety net established, regardless what happens. Checking on social security benefit annually as part of your tax planning with our firm, with Community CPA. So I want to show you what is the state like. So this is the page of the statement. When you request for the statement from Social Security, you can sign up to get that, or you can just simply go to the office to get a copy. They give you this statement. It looks like that. The in the middle, the white portion of it is actually the identity of the taxpayer. I wiped it out because obviously that's a confidential information, but I want you to see what it looked like. In that statement, it's about a 6-page statement, but only 2 areas is really important for you. You can look at your estimated benefit. This I'll tell you, it tells you everything about the benefit, not just retirement. It is also about your disability. It's also about your family survivors, and it's also about your Medicare. So it's everything about Social Security Administration, what they do for regular citizens. So this estimate, if you're not at a retirement age, you can look at that to know where you are. And you already would feel, oh, at least I have $1,700 a month and I'm pretty good. And that's a good money. Or that is the money I can rely on. Rain or shine is always there. Then the other portion of that statement is your earnings record. This is the one that I want you to check because, I have not had anybody come to me saying that my Social Security earning record is wrong, but in case it is wrong, and you can check to see whether that equals to what your earning is, right? Remember we talked about what can make up this earning? Your Schedule C make up the earning, your Schedule E can make up the earning, your W-2 makes up the earning, and also what? Your 1065-K1 can be part of the earning, right? So you want to look at your tax return, add up all your self-employment income and the W-2 income, that should equal to your taxed Social Security earnings. So that number right here, like the 1999, 37,934, those are your earnings that you can track. So if you have 35 of them and you pick the highest one, 10 of highest one, that's how it is being calculated. But let's say if you have 9 of them, that means you need to put in more, right? To get yourself qualified first. And then you can get yourself the benefit higher by putting in more years with higher income. So this is where you want to plan. A lot of times look at clients, earning records. So in this case, if I look at the earning records, even if, let's say I had a 9 years, I'm going to do the 10th year, I would not do 147,000. I would just simply do a similar number. So maybe 60,000 is a good one in this one, right? Because the factor we're talking about is on every year. So there is no need to spike up a earning because it doesn't contribute as much as what you are paying for. So this is where we say that 10 years highest earning, that's your key. All right. So we ran through pretty quickly. And this is our contact information for more useful topics that you think we can present to you, and let us know. And otherwise, and we had talked about Social Security benefit, and I hope that you had a refreshed thought over this. And this is obviously is our experience. It is our opinions. And we would like you to come to Community CPA. Let us help you to build your wealth, not just with the 5 we talked about, but build the foundation. And that is your foundation. Once you satisfy Social Security benefit side of requirement, then you can use your money to do other things. Otherwise, build your safety net first. I will talk to you again, folks. Thank you for listening, and we'll see you again. Bye-bye.